Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having an absolutely fantastic day today. In today's video, we are taking a look at the short-term and macro price action, discussing the now multi-day consolidation above 93,000 and under that critical 95.5 resistance. We are going to be discussing the next expected moves for Bitcoin on the short term and how these short-term moves may impact the macro charts. We'll also be going over upcoming economic news, the total altcoin and total cryptocurrency market cap, and of course, the weekly and daily charts for Bitcoin. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join the VIP channel. To do that, click the pinned comment, contact our admin to find out more information, check out our 52+ month trading track record, or check out a 10-minute video showing you exactly what you'll get access to and showing you inside both the main VIP channel and the exclusive group chats. We have over 700 members and have been operating since 2021. We'd love to see you in there, but let's go ahead and jump into the content. So taking a look at Bitcoin over the past week now, Bitcoin has been aggressively consolidating sideways above 93,000, that 200 moving average on the hourly, and of course, the critical resistance on the short term at 95 to 95.5. We can see over the past 24 hours, we had broken underneath this diagonal uptrend, having retesting that 200 moving average, and of course, the equal low here, or the prior higher low here at 92,000. We have since invalidated this ascending triangle structure and has shifted to more of a horizontal consolidation. We're going to be discussing what this means, expectations, targets, invalidations, and more in the video today. Let's start on the market data. 24-hour volume and liquidations, taking a look at both of these metrics over here. Volume and liquidations. Volume up 1.26% at 204 billion. Liquidations up 89% at 345 million, with 213 million coming from long positions and 131 million coming from short positions. This was widely as a consequence of this intense volatile correction Bitcoin saw from 95 all the way down to 92 in a matter of 2 hours. Since then, the Bitcoin price has bounced relatively well from the 200 moving average, but is still creating this short-term pattern of lower highs. Again, we'll discuss this in the video today. Moving over to our economic news and the DXY. The economic news we are paying very close attention to is, of course, going to be our personal spending income. This is coming out today. This, of course, is going to be pretty indicative of, this has actually already come out, pretty indicative of inflation and how that is going. We'll also be taking a look at the NFP and unemployment rate data. This is coming out tomorrow in around 36 hours. Very, very important. And then we do have later in the month, we've got our Federal Reserve interest rate decision. This is in 6 days' time. At the moment, the probabilities are still very much in favor, 94% in favor of an interest rate pause. Now, the actual result of this is not going to impact the market too much unless we see an interest rate reduction. What is going to impact the market is going to be the Federal Reserve press conference, specifically what Jerome Powell discusses during that press conference. We have also got on the 13th our inflation data, that is still some whiles away. Looking at the DXY hasn't really done all that much for the last week or so. We are still sitting pretty tightly underneath this 100 level, underneath that prior change of character. Again, while we sit under here, their expectations are going to be for lower. If we break back above the change of character, this will be marked as deviation, and we could see a rally back up to the 200 over the next few weeks. Keep our eyes closed closely on that. Again, how this moves is going to be very, very dependent on the news that comes out, specifically the interest rate data. The S&P 500 has done a fantastic thing. We have actually continued up here, support resistance flip on that 5,500 level, pushing up into our next levels of resistance over here. As we mentioned, the breakout of this downtrend would likely propel the S&P 500 up to a maximal target of around 5,800. So at the moment, provided we sustain above 5,500, the expectations are, of course, going to be continuations toward the upside, and that is expected unless we see a dramatic news event that comes out that massively alters the direction of the price action. So that is the broader markets, guys. Let's go ahead and jump into Bitcoin. Now, before we do, make sure to support the content, support me making it, and of course, support yourself in your trading journey. Sign up to BitGet, BitUnix, or BingX at the exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll also support the content, and of course, like I said, you'll be trading on exchanges I trust. So check it out. You can find out more information in the description. We'll play a quick ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get right into it. So as we can see, a lot is happening here on the short term, and as we mentioned in our prior videos, the short term is going to play a massive impact on how the next weekly candle closes in 4 days. Now, we've discussed many times now, the upcoming weekly candle is going to be pretty important because we can see currently the price is sitting just above this horizontal level at 93.7. Now, this is going to be the prior weekly low of this multi-week horizontal consolidation we had above that $93,000 region, which took us to 104,000 back in December and January 2025. So we have a pretty important level of resistance here, and we can see we defended this level of support numerous times. In fact, when we did break below it, we saw a 15% wick toward the downside. And then we broke down a second time, which resulted in the full-blown correction that was actually sustained down to 80,000, again around a 15-16% correction here. So we've seen major price action reactions upon the breakdown or even the close below this level. So naturally, what is historically a significant level becomes significant in the future, in the present. And we can see here the price action is sitting just above that level. Now, what is going to determine whether or not we sustain above this level on the weekly is going to come down to what happens here on the short term. So let's first discuss the short term. The short term price action here has been consolidating above 93,000, essentially this 200 moving average for quite some time. We can see as the time has gone along, the price action has been compressing towards the 200 moving average. Simply, this is suggestive of decreasing volatility. So we know the volatility is decreasing because the price action is moving closer and closer to the 200 moving average. And if we take a look at the structure of what the price action is moving within, we have now developed a very clear horizontal consolidation. So we've got 3 rejections on the top side, at least 3 rejections, and at least now 2 clear rejections or retests on the bottom side. That is all we need. We need at least 3 and at least 2, more the merrier, but we need at least 5 in total. So we've got a clear pattern here that has developed. Now, a horizontal consolidation is for the most part a neutral consolidation. It is neither massively bullish nor it is massively bearish. Now, we had a prior horizontal consolidation back over here about 2 or 3 weeks ago, which we can mark out by these horizontal levels. We had this prior horizontal consolidation, which we saw eventually broke toward the upside, resulting in the next leg up. So these consolidation patterns often do result in, not always dramatic, but they do result in moves that often sustain. And that is very important when we're looking at the weekly close, because the price action breaking underneath the range low will likely result in the price sustaining below and thus closing the weekly candle below this 93.7k level, whereas the opposite is to be said if we break through the range high. So currently, the expectations for directional breakouts are more or less neutral, but slightly in favor of a directional move upwards. Now, the reason we are slightly in favor of a move upwards is because of one thing on the short term, which is the direction of which the price enters. A horizontal consolidation is generally the direction of which it exits. Not always, but generally. So that is not enough information right now for us to be confident that we're just going to ape into longs on the short term, but it is something to be considerate of. If we break toward the upside, it is probably more likely to sustain upwards. And number two, on the weekly, well, of course, we've got positive momentum shift occurring here on the weekly, and we are above the $89,000 level, so we are in an overall weekly uptrend. Again, increasing the likelihood that the uptrend will continue until proven otherwise. So there are two things we are watching here on the short term. Number one, we are watching for breakout validations and then targets for that breakout. And number two, breakdown validations and then targets for those breakdowns. And then another layer on top of that, what impact breakdowns will have on the macro integrity of the trend. So let's start with the upward move first, because it is the most simple move to explain. Taking a measured move from the range high to the range low, applying that to the breakout point, we can see here an expected target for the break of the horizontal range would take us just over $98,000. Now, if we move to the weekly chart here, we can see $98,000 is going to be a pretty important level, as 98,000 is where we really start to fall back off this little cliff over here on the VRPV. This level here where the VRPV starts to decrease again is where we have a level of resistance. So 98,000 is a level of resistance marked out by that weekly VRPV as well. So moving back to the short term, that is simply it. The target is 98,000 if we break through this range. Now, for us to be confident on a breakout, now, like we mentioned already, time frame is not validation for continued moves. So we don't validate whether or not the move is going to go up or down based on the time, but we use the time above a level of resistance to confirm the probabilities that the price will sustain above that level. So in essence, if you see the price break through, you could immediately take a long, but by doing so, you pose yourself to a larger risk that that breakout may result in a fake out, but you give yourself a earlier entry than if you were to wait for a 1 hour close above. You may give yourself a later entry, but the probability that the move will sustain upward is greater than if you were to enter immediately. So there's always going to be a risk trade-off when trading. Nothing is ever safe. There's no such thing as safety. It's a false illusion. We can only give ourselves false illusions of safety. Every decision has a downside and an upside risk, and you need to balance that risk and determine what is suitable for you, your position, your total exposure, your risk tolerance, your time frame analysis, and your ability to manage and monitor your trades based on personal commitments in life or whatever time frames you are trading in. So in this instance, if we want to confirm the breakout, we do need to see an hourly close above, but any break toward the upside above this 95.5k level should be assumed that we will continue toward the upside. Now, the same is being said about the downside move. This is where it gets a little bit more complicated. The downside break here, the measured move, is taking us back to 90,000, but we know here on the VRPV, we have got a massive VRPV gap, which takes us to 89,000, which is the next level of support. So we do have the potential to actually exceed this measured move all the way back into 89,000, which we'll discuss in a second, if broken down. For the breakdown confirmation, very simple. We need to lose the 200 moving average. Now, obviously, that is going to be the case because if the 200 moving average is broken, we retest the range low. And for us to retest the range low, we need to break the 200. So the 200 needs to be lost, and we need to break the strong low. meaning we need to drop below $92,700, which would trigger this downward move to commence as we enter a low historical resistance range as represented by the VRPV massively dropping off. The expected target would be a maximum of 89,000 and a measured move target of around $90,000. So let's now talk about the consequence that either of these moves will have on the higher time frame. Upward move on the higher time frame, like we said, if we close upwards, we will close within this weekly range, facilitating a potential move to 104,000 maximum over the coming weeks. Fantastic stuff. Downward move, if we break toward the downside, we potentially close under, creating a level of resistance here, potentially marking a third lower high at this region and pushing the price action back into 89,000. This is where it becomes very important. The reaction at 89,000 will highly determine the macro direction of the trend. Just as we saw in the S&P 500, let's jump back to it. We saw a rejection at the 50, a retest of the 5,500, and then a rally back upwards. We could see that occur for Bitcoin. We could see a retest of 89,000, support resistance flip, and continuation through. Or if we lose 89,000, we run the risk of correcting into the 50 EMA and Gaussian channel upper band. And we know already if we break into this region, that is when the next high time frame downward leg will commence. So a lot is resting on what happens in this range, because that is going to highly determine whether or not the probabilities start to shift back in favor of the sellers. At the moment, they are very much in favor of the buyers for Bitcoin. Let's move over to the broader market. So total cryptocurrency market and total cryptocurrency market cap. Starting on the total cryptocurrency market cap, as we can see, the trend is very much upward, right? We have cleared out these prior lower highs over here and have semi-established this level as a support. If we are able to sustain above this region, I have no doubt the price action will continue. We're looking at 3.1 trillion as a target. The danger is if we drop below this region. So we are not playing this on a level by level basis. We are playing this on an invalidation basis. The assumption is upwards until the support is lost. So if the 2.8 trillion support is lost, that is when we then expect the trend to commence back downward. And that is something to pay very close attention to, because again, the short term is going to impact where the total is also going. So pay attention to that. And finally, guys, the total altcoin market is not looking shabby, but it is not looking as good as the rest of the market. Again, this prior lower high we have not quite yet taken out. We can see that it's sitting around 840 billion. We need to break through this region. If we break through this region, I expect a strong reversal for altcoins, potentially 900 to 940 billion. And that is going to be best case scenario. If we fail to do that, we could see the altcoin market just fall apart again like it has been doing all year. So thank you for tuning in, guys. Have a fantastic day. We'll catch you in the next one tomorrow. I look forward to seeing you all then. Bye.